And I truly believe this could be even potentially bigger than the Automator itself.
Wow.
That's how much potential I think it has. Because the stuff that we're doing is going to be so different. The way I approached Automator in the beginning of what are guys out there doing today versus what are we doing today? How is Automator going to be different? What value add are we going to bring other than just pulling payments and sending money? Now imagine that same logic being applied to lawyers in the private space.
Yeah.
We're just looking at it from a very different perspective. When it comes, it's going to come hard, and we're ready. And it's a very competitive space, but we're very excited. We think we have some things that will be a little bit different than the rest out there.
Thanks for tuning in to the Canadian Private Lenders Podcast, the show about starting a private lender in Canada, the mortgage industry, and the real estate industry. Your hosts are Neil Andrino and Ryan McNeil. Enjoy.
All right, everybody, welcome back. It's episode 38 of the Canadian Private Lenders Podcast with your hosts, Ryan and Neil. Neil, how's it going, man?
Really good. I'm going to make this comment the last time on this episode, but this studio is sweet. And
it is.
Like I just said, I am not looking forward to going back to our studio in my office.
Yeah, I hear you. We're on the third and final leg of our Ontario tour here, and we've got a very special guest joining us here. We've got the co-founder of Mortgage Automator, Joseph Fooks. Joe, how you doing, man?
Doing great, guys. Thank you for having me. Really appreciate it.
Great to have you here. Great to have you here. We're super excited about this one. Obviously, you've been a big part of our business for years, multiple businesses for myself.
Yep.
With us being an early adopter of Automator. Automator's obviously gone through a ton of changes and has been in the news recently, and we're going to go through all that stuff here.
Sure.
But I want you to kick it off here. Let's go way back. Give us an introduction about yourself, kind of growing up in Toronto and how you get into this space in the first place. Neil wants to cut in though.
Before you start, you're not a professor by chance.
No.
Okay, all right. Our last two guests both were professors, oddly enough. Anyways, go ahead.
I have a complete different background.
Okay, all right.
I am the furthest thing from a professor.
Oh yeah, okay, I want to hear it then. Let's go.
So, grew up in Toronto, actually up in Thornhill.
Okay.
Went to school, did my shtick. Went to York for, I think, 3 months. University wasn't for me. So there's the professor route.
Yeah.
My cousin was in mortgages.
Okay.
So I decided to get into mortgage when I was 19.
Okay.
Got my license.
Wow.
Nice.
And just started brokering.
Yeah.
Obviously, at 19, it's very difficult to look people in the face and ask them to trust you. So I had to adapt a personality for the phone. And I did a really good job of, building rapport with people. I had to mature very quickly because, most people have their youth life crisis at 30 when they realize that they're no longer kids. I had it at 19. I had to grow up fast.
Yeah.
My dad, I remember saying, look, you can stay here as long as you want, but you're cut off from pretty much everything. Food and roof, everything else is on your own. You want a car, you pay for it. You want insurance, you pay for it. You want to go to the movies, you pay for it. So quickly I had to realize, okay, time to put head down, and started learning the business. Started selling over the phones. Quickly realized a lot of money to be made in private lending. So I'm not going to mention who I started with. It doesn't matter, but built up a nice business. We had a disagreement. We decided to go different ways. And I decided I wasn't, go ahead.
Sorry, what type of business was this? Was it
this
the
was a mortgage
brokering side?
brokerage.
Okay.
It was a mortgage brokerage.
Yeah.
And a little bit turned off, to be honest, being a broker. It was 7 years of grinding from 19 to 26.
Okay.
Didn't have a lot to show for it just because of the way things ended. But I will say, I look at that as my genuine business school.
Yeah.
Of just work ethic, understanding the industry, understanding finances. A lot of people don't realize or figure that out till they're sometimes never. But I picked it up really quick, and I knew I was really good at selling.
Yeah.
And so decided to get into private lending because I realized when I was dealing with the privates, and there weren't a lot back then, this is a really cool business.
Yeah.
Started with a few $100,000. Started lending it out all over the country. A little here, a little there. I wouldn't say these were the cleanest deals. definitely more higher risk borrowers because like you're limited in capital.
Yeah.
So you're going to, Winnipeg and you're going to parts of Nova Scotia.
I seem to remember a story, Joe, you telling me about having to take a trip out to Nova Scotia to clean up a mess.
Oh, that wasn't me, actually. That was my investor.
Okay.
But we lent to a guy and it was a horrible story, but he took the money knowing he was dying and had no intention of paying it back, and basically destroyed the house.
Oh.
Luckily, we were very conservative lenders, even out there and back then. He ended up breaking even on the deal, but a lot of headaches came from it.
Sure.
That's when I realized, like I got to stay close to home. Decided to kind of regroup. And then a buddy and I I started on my own, essentially building it from scratch. Decided at the end of the day, I think it's better to bring someone else in, work together. It's a bit of a funny story because, we'll go through a few parts of it.
Sure.
So after the first thing didn't work out, I worked with a friend for about 1.5 years, 2 years. We also didn't work out. But he sort of empowered me to build the first level of the software. We were just like messy. We weren't consistent. The formatting on our documents were not quite right. Sometimes we made, mistakes, wrong borrowers going on, the term sheets because you're using the same templates. And so I called my buddy Pavel. I'm like, hey, what do you want to build this for me? I need something to take an app, the Philogix app. I drag and drop it, and it puts it into a system where I can generate a term sheet. That's all I need.
Yeah.
And he builds it. Me and that buddy don't work out. He then agrees to just, I pay him whatever I paid for the software. I pay him his portion. I'm like, this is mine. I'm going to keep on with this. You do your own thing. Cool. I start on my own, again, with a pretty much broken version of Automator before we called it Automator.
Yeah.
It was for me to run my own $10 million portfolio.
So was this before or after JV had started, JV Capital?
This was the beginning of JV.
Okay.
So this was, and then I bring in Lawrence, we build it up, and we grow to about 40 million without any employees. We had employees, but there was a lot of turnover.
When you say 40 million, you mean?
AUM.
Okay.
Yeah.
But we were grinding.
Yeah.
Like working crazy hours, but just two of us with a broken version. We kept building it up, making more improvements. Hey, Pavel, can you build lawyer's instructions? Hey, Pavel, can you add, a discharge statement? Can you add lawyer distribution? Can we pull payments with this machinery?
This is a fully internal software then for you guys. So you're
straight up.
So you're running the private, you have 40 million AUM, and at the same time, you guys are building this internal software with Pavel.
We decided that it was better to invest money into the software than to rent people that could technically just turn over.
Yeah.
We felt that we could build a better foundation.
Yeah.
And then obviously bring people in once we scale the company.
Got it.
Also to bring in better quality individuals who can actually not do the menial work that I think a lot of owners and smaller business people struggle with in the beginning when they start their own companies.
Yeah.
So the consensus was, let's keep pumping money into the software. And around this time, I was literally whole sitting at a CMBA event. And I'll never forget this. And Christine Zhu, if she's listening, Christine, this is all thanks to you.
Shout out, Christine.
She sees my software and goes, what is that? And I'm like, oh, it's like my secret sauce. It's the ace up my sleeve. She goes, this is really interesting. Would you sell it to me? And I was kind of toying around the idea of actually going to market with the product.
Yeah.
I just wasn't sure if I wanted to go a different direction. I have a lending business that's doing well. It's building up. We're about to bring new partners on to help grow JV to another level. But there's something, and I looked at Lawrence and I said, I'm telling you, we're going to sell this thing one day. We're going to sell it to people. We're going to build a software company. And ironically, Pavel was going through some turmoil with his business partner in the web dev space.
Okay.
So Pavel ends up selling the company to his partner. Ironically, as soon as Pavel left, that business went sideways, of course, because Pavel was
the business.
And the brains. And I said that to him from day one. And I said, why don't you come in? We'll go 3 ways. You build, we'll finance the original build of the business, bring in your devs, because we have no clue what we're doing on the dev side, but we will consult and we will build something that we think is going to hopefully something we can sell.
Yep.
And I thought like everyone ran the way I ran. Boy, did we learn quick. And Pavel was really upset. If you ever interview Pavel in the future, I bamboozled him so hard. I said to him, guys, just build the term sheet properly. If it's just an origination system, we don't need to sell anything else. Right. No, like people have other servicing platforms. We're good.
Yeah.
Well, we bring on 10, 20, 30 clients and everyone's like, what about servicing?
Yeah.
Pavel, I know I lied to you. I told you I only need an origination system, but you're going to have to build a whole EFT platform, full payouts, full distribution. We're going to have to also track investors, and he builds it. Okay, go sell. Lori and I go, we sell, grinding, like owner selling, 5 demos a day. And I'll tell you, I'll never forget, like just before COVID. And the devs are still learning, and they're pushing code in the middle of my demo, and the system breaks, and I come out of the office screaming and yelling at the 15 people in the office at the time, like, guys, I'm on my 5th demo of the day. Like, are you guys serious right now? That was like, you look back now and it's like, holy crap, like what we went through to where it is today, obviously. Yeah. And then I went to Pavel, like, oh yeah, you're going to totally have to build a whole fund module. We have to build accounting, reporting. Yeah. It's going to have portals. It's going to pretty much have to do everything. And we just, as much as I hate COVID and what it did to the world, and secretly it was a blessing for the company, because I was getting phone calls from clients saying like, is your system web-based? We're like, well, yeah. Like, see, I'm having issues getting onto my computer at the office, and I can't go to the office for the next 6 months.
Yep.
I'm like, well, do I have a solution for you?
Yep.
And whoever was literally not going to sign up because of COVID quickly came back to being like, oh, we need this. We need it yesterday, because we're getting killed and our businesses can't run, and we're still managing a mortgage portfolio.
Yeah.
We may not be originating right now, but we still have a portfolio that we're servicing, and I can't get into my computer.
Right. Right.
And like, oh man, we pushed hard.
Yeah.
And we took risks, and like we flew to Zona and Florida in the middle of COVID, dealing with those hotels and all the issues that we had to deal with. Pavel actually stayed in Dallas or Texas for a month, like living there, working there, doing the circuit, just so that we could take turns going to shows. It was really hard. Yeah. And then staff not coming in, where we used to have an office full of 20 people. No one's coming in. It's just the 4 of us coming in. It was a huge change, but it's sort of what gave us our wings to keep pushing the business forward. Sure. And after that, obviously, we made aggressive strides into growing the business, expand to the US, and here we are today, 400 customers later.
Wow. Just going back a quick step there. So I know in interviewing Lori in the past as well that Automator was created as a solution for JV.
Correct, 100%.
When did you know that this is something you could market to the masses?
It was the lawyer there.
Huh?
Was it the lawyer? What was her name? The one that you met?
Oh, the lender.
Who was it that you met that wanted to buy it?
Oh, Christine Zhu.
Yeah.
So Christine, she's a top-notch, power woman broker. She's recognized in magazines, and she wins all sorts of accolades and awards. She's like, it's not that I didn't think we had something, but we were very much also weighing the options of this is my secret sauce.
Yeah.
It was so good even back then that a broker would send me a deal. I would take the app, drag and drop it. Okay. If I knew the deal was a good deal, let's say it's a 60 LTV no-brainer.
Sure.
As the broker's talking to me, I'm already putting in the details into the system. By the time we're off the phone 5 minutes later, the term sheet was ready in his inbox. Yeah. He's like, dude, how did you do that? I said, don't worry, just keep sending me business and I'll keep servicing you.
Cool.
And we blew up the business that way. And then the question was like, do we give this to all of our competitors? There were more guys, coming out. We went to a few trade shows in the beginning, realized like, man, there's a whole market out there, started generating a lot of business, grew the book, brought on our new partners. Now, JV's $130 million business, AUM, and growing. And we run it with 3 employees. Obviously, partners are involved in some of the management, but
So how did you handle JV at the same time as going through this madness? 'Cause if you're like,
it was really hard.
like, were you just
15-hour days? The reality is, like, in the beginning, we weren't getting a lot of demos. The product wasn't complete. So a demo a day, 2-3 demos a week, maybe. It didn't take up a lot of our time. And Pavel and the team were still building out the software. So I could still run JV. And then I brought in some amazing people into the company, power people who have just allowed me to trust them with the company. And they've taken over. They run the show.
Yeah.
I still obviously manage my relationships.
Yeah.
But they're full ops. They're taking care of everything. So it took some time, but then at some point, COVID hit and we stopped lending for 4 months. And that was the trigger point where it's like the demos just started coming in and I'm like, okay, well, I'm now fully into Automator. And we had a conversation with our partners saying like, we have to see the software through. We've invested money into it now. It has a lot of potential. Let's bring in people to help replace myself and Lawrence in our day-to-day. And it never looked back.
Where'd the money come from to run Automator?
JV, fully self-funded. We bootstrapped the whole business. We took a lot of risks. Yeah.
Wow.
So cool.
You have to have like,
crap.
yeah, because like, look, I knew that the origination piece was good enough that like, even if we had 30, 40 customers, we'd eventually earn enough money that we'd make a decently healthy living.
Yeah.
As a second side. I always looked at Automator as a side gig business. Build it up. I'll sell 30, 40, 50 accounts over, 3-4 years. It'll pay a decent amount of money to us and we'll make, a few bucks on top of what I make at JV. And I'd be very happy with that overall return on investment. And I would eventually get the money back. We never thought in a million years. Pavel, I will give him credit. Pavel, I know you're going to listen to this. He said it was going to be a big business one day. I told him I think he was out of his mind and, to come back down to earth, but he's right. He was dead right. It became a pretty big business and I'm glad that he was that positive and optimistic about pushing it as far as we went with it.
I'm not surprised. I was just going to go pivot and talk about, you mentioned you got 400 customers now, which is incredible. How many staff are servicing out of Automator?
70 now, base? Just about 70. And we're growing. I think the plan is by the end of next year, 120.
Wow.
The plans, obviously, with the new partners is to grow the business exponentially.
Yep.
It's always been our plan. And once we picked up the steam, as the software becomes better, it's easier to sell it. What we'll realize.
People use it.
Exactly. You got now people endorsing the product.
Yeah.
We got, people using it.
You should probably put him on Kamesh.
100%. Huge ambassador, obviously, of our product. And I continue to thank you for that.
Yep.
I think the one thing that the way we did it, which was different, is like ownership is still very much involved in the company.
Yeah.
It's our business. We will continue to run it. And we've been given free reign to run it. We have obviously partners now, investors, but they trust us and they want us to run the business with our vision.
Yeah.
And we will continue to do it that way.
Yeah.
Has it become a profitable business or was it a profitable business through the process or has it been always kind of a...
So we're always bleeding money. It was really hard in the beginning.
So you start to get there and then you grow. And
Pavel would come to me and say, we're not going to make payroll tomorrow. I need $100,000. And Lawrence and I, or Pavel, 3 of us would put money in within a few hours' notice. And thank God JV was doing well enough that we saved up money and I wasn't spending it on anything. It was literally just like I had a bankroll and I knew if we went through that, then like we'd have to raise. But up until then, we always organically grew. we never went nuts. Some of these VC guys, they'll go raise VC money on an idea.
Yeah.
They'll go hire a bunch of people. They'll burn a bunch more money, then do a second, third, fourth, fifth round. Pavel was like, listen, I have buddies in the space. They have these crazy businesses, and now they've got nothing left of it.
Yeah.
Some of them were fired and let go as CEOs because they've not been able to get the business off the ground. Sure, they raised on $100 million val, but now you've been diluted to 3% of owning your company. Like, why even waste your energy? Who's going to grind to do that? And that's the problem. And I think people get addicted to the raises, that lifestyle of like, oh yeah, venture, like what you see in the movies.
Right.
I got to tell you, I thought, go venture, go raise money, get $5 million, give someone equity. They'll help us. The reality is like, now we're getting proper help. Now we're getting proper advice. Now we're getting proper guidance because they know the business is a successful business.
Right.
Until then, yeah, burning money. We always tried to keep the burn, and this I could be honest with you guys about, no more than $100K a month.
Okay.
It was manageable.
So you could service it always.
You could service it.
Yeah.
We figured out ways to sometimes you hire people and then you get a bunch of sales, and in a few months that burn disappears or goes to like 20, 30K, which is not really burn.
Yeah.
Yeah.
Technically on paper it is, but like in that PE world, venture world, 30K of burn is break even.
Right.
So we always coasted around break even for a long time, just kept hiring as we could hire. And then just last year we became profitable.
Cool.
The tides changed. You guys remember when interest rates went up and that equity party where, people are getting 20X on their businesses on ideas. We had to make a decision at that point, which is, I think we were too premature at that point. It's like, go exit now or sell your business or do a raise or whatever you want on a stupid valuation.
Yeah.
Or put your heads down because the headwinds are coming. Our advisor was like, look, next 2 years, pain. You guys are ready for it? Put your heads down. If you can come out of it in a good place, you're going to do really well.
Yeah.
If you don't, and what happened was we saw very fast, anyone who raised bled through the money because they were burning through crazy cash, started doing down rounds. You know what a down round could do to your business? So let's say you raised on a $100 million val. On a 15X, 20X val. You're now, let's say 2 million more in revenue, but then
You're 80 mil.
You're worth 80 mil, 70, 60 mil. And now you need to raise another 10. And you've already given up 20, 30%.
Yeah.
You're now giving up 20 just to raise another, I don't know, have the numbers in front of me, but like you get my drift, right? Super dangerous. And he warned us that people will be stuck doing this.
Yeah.
And if you listen to a bunch of other podcasts, guys who are in that space were saying, if you don't need to raise, don't. And if you don't need to grow 400% a year, it's okay. 50 to 100% or even just positive growth with even a bit of positive EBITDA is what companies look for now. And he told us, and no joke, within 3-4 months, the market flipped when those banks in the US and California had liquidity issues. That's when we realized like, we're in trouble. Not we, but the venture private equity world's in trouble. And our valuation was diced in by 50% overnight.
Wow.
So we were not going anywhere. And we decided, heads down, build the business, build a better product, fix as much as we can, always. And by the way, it's a never-ending work in progress. Pavel used to joke, and in 6 months we'll be feature complete. We will never be feature complete.
Yeah.
We realize that now. 7 years, 8 years later, there's always something to build. Going to the US, totally different world, different market, different terminology, different ways of, the system calculates interest 8 different ways.
Yeah. But and I've always said this to you, that innovative mindset that you guys have and the willingness to not only adapt to what the masses want, but each individual customer, that's what blew me away. And that really sets you guys apart from any competitors that I've seen.
I think that part of the way the company was built was thankful to all the clients who supported us from day 1, day 2. The guys who knew we had something special, but just it wasn't built out yet, and helped us build a better product along the way. We listened. We all knew we didn't know everything, especially Lawrence and I coming from the lending space, but we don't manage a fund.
Mm-hmm.
We run a different operation. So we didn't know everything. And so we had a lot of clients who were like, look, we believe in you. We're going to help make it better. And Pavel did a great job of our team did a great job of listening to make it better. At this point, we do vet customers. At this point, if you do some stuff that's totally out of left field, we're going to tell you either adapt to what the system could do for you today, or
Sure.
don't come on because it's not going to be a good fit.
Yeah.
And we did make those mistakes as part of our growing pains. Bring on anyone you can, and then you start realizing like, well, this 1 out of 200 people needs this thing, and it's going to take 3 months to build and $50K of investment, and like we'll never see it back. And we had to make difficult decisions, and either people had to adapt or they weren't a good fit for the system. But we had to make it good enough that 95% of the people out there could jump in and start using it right away, which is, I think, where we are today.
How did you find those initial customers? You were just pounding like mortgage conferences, everyone you knew in the industry.
So because I go so far back, I'm 39 now.
Over
I
half
started
your
in the mortgage space at 19. I kind of met a few people along the way.
Yeah.
So relationships.
Yeah.
I'm a big relationship guy, hence, why I'm in charge of strategy and partnerships. And I knew everyone in the space, and I was able to ask for favors, and people knew I had a good reputation. And we had uphill battles. People were definitely worried that like, oh, the competitive lender is going to have access to my data. So we had, non-disclosure signed, everything signed to make sure people were protected. And I kept explaining, like, you guys don't understand. JV is a great business, but this is going to be a home run one day. Like I would never jeopardize ruining, like by stealing investor data or broker data.
Sure.
I'm like, we go to all the same shows. The brokers are there. It's fair game.
Yeah.
Like you shouldn't look at it. And I said, like, look, and some people, by the way, would not sign up.
Because of that.
Correct. And then like a year would go by and they'd hear a big name jump on and another big name jump on. And they're like, okay, am I going to hold this grudge and have my ego in check? Or am I just going to realize that I need a better solution to the existing software I'm using today?
Yeah, the efficiency is worth it. And then realistically, you're trying to build a business. You're not trying to be greasy. Like that wasn't the intention with the...
No, and thank God our integrity, and like we stuck by, and that's who we are. And you can ask anybody over the last 7 years if they've ever felt threatened that we were coming after their clients or their business. It was never like that.
Yeah.
But definitely uphill battles.
Yeah.
I had people halfway there like, sorry, boss doesn't want to sign off. He's not comfortable with you being a lender. I dealt with that a lot.
Wow. So you've alluded to your new capital partner, BVP Forge.
Bessemer Venture Partners,
So let's talk about that. So who are they, and how is this going to affect the future of Mortgage Automator?
So they're a private equity firm based out of Silicon Valley, California.
Mm-hmm.
They have a venture division called Bessemer Venture Partners. Forge is the private equity firm that's spun off from the venture side. But they have access to obviously all the resources that the venture side does. And they've invested in companies such as LinkedIn, Twitch, Twilio, Yelp, Shopify.
Wow. Couple names there.
A few names that you might have heard of. Right? Wix. And so Rob Arditi is the one heading the private equity fund. He's our relationship.
Mm-hmm.
He's a phenomenal human being. Welcomed us with open arms. Even that whole process was really interesting. I'll tell you, like, you go through it, it's nerve-wracking. It's very stressful because you're trying to run a company while doing an exit or, in our case, a majority recap.
Yeah.
They brought on a managing partner who's the chair of our board now. His name is Tom Obermeyer, another brilliant human being who we work very closely with. The sheer talent of the people that we work with there, it's on another level.
Mm-hmm.
Because we interviewed a lot of private equity firms, and no knock on them, all super impressive companies. There was just something different about these guys when we met them, and they saw something in us that other people didn't. Tom used to be the former chief risk officer of Deutsche Bank and the former chief risk officer of Citibank. And so you're bringing in this type of talent. and Rob's experience on the private equity and venture side, it goes way back. And so you've got these people who welcomed them, us into their family. We generally feel like we are family, new family now in California.
Yep.
And they truly believe in what we've all built. And they think this is like, we're heading to the moon, like this, like we're going straight up, and their support's not being, unrecognized. They're definitely helping us organize the business better.
Yep.
It's definitely, new.
Yeah.
We're part of a board now. Never had to do that before, but I'm definitely learning about all the things, all the data sets that we have to collect, all the things that we didn't have before.
Sure.
Just because we're so busy trying to run a company and making it profitable and paying salaries, you're so head down, you don't have time to look at the big picture. They've really opened our eyes into like how many different directions this can go. We've been secretly working on a few additional verticals, which we could talk about on the podcast.
Ooh.
Yep.
Releasing the secrets. Well,
Yeah, before we go ahead, Neil.
I say, what caused you to approach? Like, did you approach PE firms, or did they call you? Like,
it's interesting.
You were saying you guys a few years ago were like, okay, head down.
So, from my understanding, and so these guys watch your LinkedIn. They have analytical tools that watch companies grow. So they see employees growing at a company and fast. So if a company goes from 10, 20, 30, 40 people, they're like, what's going on? We should have a call. And LinkedIn's very good at providing that data because they pay for it. And people start calling Pavel nonstop, reaching out to me nonstop. At first, we're like, what's going on? This is weird. A bunch of people flew in like a year or 2 years ago just to so we can kind of get an idea of what they want and what they're looking for. This was before we had bankers. We dealt with these incredible bankers, which I'll go into in a second.
Okay.
But we had no intention of doing anything. And then when the bankers reached out to us, so Zach and Shane from Kaizen Equity, two incredibly brilliant human beings, two amazing guys that we bonded with, truly like the most professional guys I've dealt with. We met with a lot of bankers
Investment
too.
bankers?
Yeah, correct.
Okay. Yeah.
So they help sell the businesses.
Sure.
And they're like, guys, you have something special. Here's some comps on, the businesses we've sold recently. We think we can get you X. And this is the range. And Pavel has already had a Rolodex about 90 private equity firms that had directly reached out to him that he was having literally quarterly conversations with. And people are like, let us know when you're ready to go. And we're like, we're not ready. We're going to get to a certain number and then we can talk about it. And then when we talked to Kaizen, this was just before the headwinds started. So they're like, look, guys, we'll engage, but let's wait until the market's a bit better. Right now, the market sucks. So we re-engaged with them in October of last year. And they're like, look, the comps are good. We just sold some good businesses for some decent valuations. Now would be an interesting time to go to market. Are you guys ready? Do you want to explore? We said, yeah, I think we're ready. And because there was just so much positivity. The company was in a good place. We were growing. And look, full transparency, we bootstrapped the business. We never took a dollar from the company for 7 years. You know how hard that is?
Yeah.
Like, never mind not taking profit from the company, you're reinvesting money. And, we're young guys with young families, and we had to look at things from a reality perspective and say, might be time to take a few bucks off the table. And the timing was right. And Kaizen, did an amazing job on putting a whole presentation together. They coordinated everything. They took a lot of stuff off our plate. And funny, BVP, when the process officially started, they were the first guys in our office. And they left such an interesting impression on us. And it was something, to think about.
Wow.
Because I think when you build a business, your goal is to sell a business. Your deal is not to stay on and keep going, right? You build, you sell, someone else smarter than you picks it up, takes it over and grows it to something else. And you should be okay with that because you're not that smart. And they basically convinced us that it would be a good idea for us to stay. Obviously, I'm quite excited to be learning from really brilliant people.
Yeah.
I'm in a new world that I never have been in before. And so learning a lot. And I could say, I can see the changes already happening for myself internally how I look at things now, whereas how I used to look at them 3 years ago. So I feel like I've definitely grown and I have a lot more growing to do. But I'm just super excited with these guys. And again, we met a lot of companies, a lot of Zoom calls, a lot of in-person meetings. It was really tough because you're in a room in meetings for 6 hours.
Yeah. Explaining
why you're a good acquisition, why they're a good partner to you, why they're going to help you better than the next guy. And we just felt comfortable that this was the company we wanted to do a deal with.
Cool.
And we did. We closed 2 months ago.
Yeah.
It's been 2 months since the deal happened and pushing very hard right now.
Did you say you first engaged in just October of last year? Of 2023?
No. So
no, it must have been longer
we
than
spoke
that.
to Kaizen in 22.
Okay.
I think November of 22-ish.
Okay.
It was just to have the conversations and to say sure, we'll go to market at some point.
Yeah.
So we committed that we'll list our house with them at some point in time when we're ready to list.
Right.
And we did, and they did their homework and due diligence, and we were keeping in touch. They were very good about that, keeping us up to date as to what's going on in the world. Obviously, Pavel and I and Lawrence were very much keen and in tune with what's going on.
Right.
So we were keeping our eyes and ears open. And when push came to shove, we said, okay, we're going to go to market January 20th, I think it was, or 21st. Everyone go on your vacations because you're about to go through hell. And I wouldn't say it was hell. I would just say you have to be mentally prepared for something that's, you're running a full-time business.
Mm-hmm.
And then you're engaged full-time with people in your office every single day. And you've got staff asking questions like, who are these people?
Mm-hmm.
But you can't say anything until something happens.
Yep.
So it was probably, that was the hardest thing, is how transparent can we be? And then clients, don't want the clients to know because they think that we're leaving. They start getting nervous.
Mm-hmm.
But we stayed, and I think a lot of clients were very happy that every client that I've talked to in the past said one day you'll sell this. Nobody would ever be upset that I sold a business and took the payday and moved on with my life. I don't think anyone could ever be mad or upset about that.
How did you then, so to that point, how did you choose to stay as bring them on as an equity partner versus someone who just buys you guys out?
It's a great question. There were a lot of options on the table: minority, majorities, full exits were also interesting, but it still comes with its own issues. You have to stay on for X amount of years.
Mm-hmm.
You've got to hit certain targets. If you get X amount up front. The rest you have to so there's still carrots they're going to dangle to kind of keep you going, because you can't just pick up and leave and walk out the door tomorrow.
Mm-hmm.
Say, here you go. Here's a business. Here's a software company, 70 employees. Go deal with it.
Mm-hmm.
So our outtake was well, the upside is we can now grow this company again. Build it up. These guys have a vision. BVP has done very well in the space. They've built huge companies. The people they've brought in to help manage these companies have all done very well as well. They just have, they know the secret sauce to doing it.
Yep.
Now, obviously, the founders we have to all be in it together, in it to win it. They need us to keep running the ship.
Mm-hmm.
But with their guidance, opening our eyes to what's at the horizon, it gives us a different perspective on how we should be approaching the growth of the company moving forward.
Interesting.
So I know from social media and just being in touch with you that you're on the road a lot. You're at every conference in Canada, not only Canada, but all across the United States. You're on the road. So with this new change to the business, how do you expect that to impact the life of an executive at Automator?
Listen, the attitude from the day one was at least one founder, typically two, was at every trade show, especially in the US. Canada, it's local, so it's easy to show up. It's not a big deal. In Canada, it's also geared very much towards brokers, the shows.
Right.
The exhibitors are all our clients. You walk through you've been to all the shows.
Yeah, good point. Yeah.
Eventually, 95% of the people exhibiting are your customers. And so there's not really much else or anyone else in that particular location that's going to show up that you can convince to sell. Realistically, at that point, especially in Toronto, you're looking at word of mouth. The last few people who are either starting new lending businesses are coming to talk to you. Whereas we do have the majority of the people at the shows already using our platform, and they're obviously happy they're endorsing it. We're doing more social media stuff. The US is a whole different animal. It's so big. It's 10 times, I'd say even 15 times the market. And we've barely even scratched the surface. But at those shows, just like the broker shows we go to, imagine every person walking the floor is a private lender.
Mm-hmm.
So your exposure, you could walk out with 30, 40, 50 leads of private lenders, and there's new faces because the shows are never at the Brampton International Center or at, the other,
Metro Center or whatever.
Metro Center, whatever.
Yeah.
It's like we're in Scottsdale, we're in Balboa Bay in California, we're in Miami Beach, we're in
Tough life,
Austin.
Super dusty places. Yeah, it sounds terrible.
We're in Atlantic City, we're in Dallas, Austin. The list goes on, and they're always, I've got a Utah executive conference I'm going to where it's like all the heads of the companies. It's like a very exclusive event, and I was lucky enough to be invited. It's hosted by the MPLA, and honored to be part of it. But US is very different. They're very you got to see how much money is playing in those universes,
and much more fragmented there in terms of it's not necessarily the Canadian model of brokered business down there. Is that fair to say? It's both.
I would say a lot of direct to consumer lending.
Mm-hmm.
So they're technically brokering, and again, their world's a little bit different because a lot of guys will buy it, take a note down, and then sell the note. So they're brokering, but they also have like credit facilities where you take the note, you buy it, within 2 weeks you got to sell it to your buyer based on their credentials. Some guys obviously service, and when the rates went up, people started moving to servicing, and the market will always fluctuate over there in the US.
Why do you think the model's like that there?
It's always been like that.
It's just so big that each individual step is its own business.
Yeah, and again, what's really interesting is no owner-occ lending. It's commercial, construction, and then rentals. So it's debt service type properties, and then fix and flip markets.
Yeah.
So you buy, because we don't have that.
Our business.
Got it.
Yeah.
So we don't have that really. Like in Toronto, what's the average house is $1 million. There, you could be somewhere where the house is, like in Houston, for example, I drove through this area where like the Bushes lived, and each house is 40, 50 million bucks. And you drive 2 miles the other way, and you could buy a house for 200 grand.
Mm-hmm.
And super nuanced. It's
makeup
crazy.
on a pig. Yeah. Just paint it, new floors, basic kitchen, and it's either being rented for an affordable price of $15, $17.50 a month, or like a condo here where a 1-bedroom is $2,400. Right? Their whole family can live in a 3-bedroom house for $1,500. And it's also like in Oklahoma and, more rural places where real estate's not insane. We have clients who do very well, for example, in the US, managing $5 million. And if I'm not going to go into the details, but like some of the returns are insane because they're the only guy in town lending money. And so like there's a different niche there. And again, you can't lend owner-occ because they have foreclosure rules there. And depending on the state, you can have someone out of their house in 30 days. So you don't want people in that type of business throwing families out of their owner-occupied properties. It's like they have homestead there. Yeah. So rental properties, they don't care because you don't live there. Yeah. Or a fix and flip. So if a guy defaults on a construction project, who cares? Throw them out, change the locks.
It's a business-to-business transaction.
Yeah, it's a business. The guys, you screwed up, you're done, you're out. Go ahead and, we're going to take it over. We're going to fix it. We're going to put it on the market and sell it. And there is liquidity for 300K properties, 400K properties. That it's just a different world out there. Yeah. And so going back to it, like we do go to a lot of shows because you're meeting new people all the time. It's also because we're not in the States, not for long, but we will, we're going to eventually get an office in the US.
Yeah.
But this is when you have time to see your customers, spend time with them, hear what they have to say, get their feedback. Obviously keep tabs on your competitors.
Yep.
See what they're up to. Because it's quite quiet in Canada.
Yep.
From that standpoint.
Just on that note, and you've kind of alluded to it already, but how would you describe the differences in your marketing strategy between Canada and the US?
Well, we're obviously always working on marketing campaigns to improve more leads, business towards the company. Obviously, a lot of inbound stuff. Referrals are super important to us. That's why doing a good job and being able to get you to endorse the product is just as important as someone just applying online. Because when people say, well, what is everyone using? And in Canada, the consensus Mortgage Automator, well, I don't really need to go look at the other products out in the market because, well, if all my competitors are using it, I'm not trying to recreate the wheel. I need to use what my competitors are using to stay competitive. And we're always trying to stay ahead about things here. And slightly off course, I will make one point, like the FINTRAC rules are coming out in October, right? We've been way ahead of it.
Yeah.
So one of our competitors, I won't mention, have basically said, we're not going to do it. I can't comment on the other competitor because I don't know what their stance on it is. But we've already been proactive in giving all of our clients in Canada the FINTRAC solution for IDV, bank verification tools to verify that money's not being laundered. And we're working on the final thing, which is the special persons verification, which is if someone is a known threat or someone is doing some shady stuff, that you can't essentially lend the guy money after renewal.
Got it.
So we are being ultra proactive. I think that's what we do very well. US, again, whole different animal, different sets of rules, things that they need, and we separate them very much.
So I wasn't aware. Did you have any business in the US up until
Me
now?
personally?
Well, like from Mortgage Automator? Did you guys service the States?
We have 200 clients in the US.
Oh, okay. So that's a big part of your pool now. And like you said, you're just touching
50-50.
kind of just breaking the ice there. Okay.
Yeah,
So you're 50-50 now.
We've actually grown. I'd say, more clients are signing up through the US today than Canada. Statistically, if I look back at my numbers this year, I definitely have more US signups than Canadian signups.
Yeah.
Okay. And that's, like you said, you're just touching on it there now. Like it's...
Oh, yeah. We're going to go very aggressive in the US.
Yeah.
We're launching some new features that I think are going to be detrimental to further success of the software in the US. And I think it's going to give us a big push. And because of that, I think we're going to do very well over the coming months and years.
Let's touch on that sauce of what do you got coming? What can you share that you are excited about?
So Pavel's been working like tirelessly to...
That poor guy never gets time off. I feel like this whole story is just, we got new stuff coming, and Pavel's like, really? Are we doing this again?
Yeah. It's always, you know what? Like, I love the guy to death. He's an incredible business partner because he doesn't have an off switch. We are taking our first vacations next week, both of us.
Nice.
We haven't had time even since the transaction happened.
Where are you going?
I'm going to Florida. And
Nice.
Pavel's actually also going to Florida. He's going to Disneyland with his kids.
Nice.
sweet.
Good for him.
I'm just going to go chill and play a bit of golf.
Nice.
And it's going to be well needed. And we'll be probably talking the whole time about planning.
Sure.
That's going to give me the time to plan and think about next steps. Secret sauce in the US, there's going to be some portals coming out that's going to make the user experience significantly better. So borrower experience, broker experience, investor experience is going to be improved.
Nice.
We don't have that in Canada. So investor portals going to be a big one. Can't go into too many details, but just kind of give you guys a bit of the little tease.
High levels, yeah.
A big thing that's coming to Canada is going to be a tool that will allow lenders to instruct their lawyers. So that's
cool.
That's going to change, I think, the space.
Yeah.
We already have lawyers on it. They're using it.
Yeah.
I'm not going to say which lawyers.
Yeah.
Might have met them, maybe you haven't.
You might have met them on a prior episode.
And we realized, again, the same issue that I realized in the space in Canada, which was like, we don't have a good enough solution. How do you get a deal from a private to a lawyer? Well, you send them a piece of paper. Well, that's great. Now they got to manually do it all from scratch. Well, the same way you guys get deals from Philogics, fully blown into your system, imagine the same thing happens. You push a button as a lender, and in milliseconds, poof, email shows up to the lawyer. Here you go. Here's your deal.
Yeah.
Here's the loan details. Same way you guys get a Filogix, right?
Yeah.
And boom, their system is 99% populated.
Disclosure
And then,
statement's done.
Boom,
Yep.
all the docs that we have get pushed in as well. So they have all the forms, all the conditions that we want are there. It's
Game changer.
It's going to change.
Is it going to require uptake from a lawyer? Like, do lawyers need to have subscription to your software or anything like that?
It's going to be, I can't talk about pricing just
Yeah.
yet. We're still working on it,
Yeah.
but lawyers will have to adapt the product.
Sweet. Sweet.
Just like lenders have to adapt. They're like, hey, you want a deal?
It makes
from
sense for them.
Filogix?
It makes sense for them on an efficiency
Exactly.
basis. So,
And we're literally thinking about it from that perspective,
Yeah.
which is like, how do I take a deal that takes an hour for a lawyer to prepare
value
to
add.
get it to 10 minutes?
Yep.
Right? How do we get them to communicate? How do we get them to keep us up to date on things throughout the transaction? And so I can't go into too much detail. You guys, we'll be releasing it probably closer to October. And we
Nice.
can do, if you guys want to do like a secondary thing on it, like
Please.
happy to really go into nitty gritty at that point.
Yep.
But just a little teaser, you guys are the first to be hearing about it. And I knew I had to kind of give you guys something,
yeah.
Gonna give us a nugget.
but I think it's going to change the private space again for the better.
Nice.
And it's been a lot of work, a lot of stress in building a brand new vertical, which again is my job.
Yeah.
And a lot of people doubted it. They're like, you're crazy. You're not going to do this. This is nuts. Stick to what you know. And I'm like, this is how we grow as a company.
Yeah.
And funny, Bessemer loved the idea. They totally, saw the value in it. And I truly believe this could be even potentially bigger than the Automator itself.
Wow.
That's how much potential I think it has. Because the stuff that we're doing is going to be so different. It's going to be like, I'm really, just the way I
a whole other
approached,
industry.
totally, just the way I approached Automator in the beginning of what are guys out there doing today versus what are we doing today? How is Automator going to be different? What value add are we going to bring other than just pulling payments and sending money?
Yeah.
Right? Now imagine that same logic being applied to lawyers in the private space.
Yeah.
Again, can't get into too much about it, but we're just looking at it from a very different perspective. And when it comes, it's going to come hard, and we're ready. And it's a very competitive space.
Yeah.
But we're very excited. We think we have some things that will be a little bit different than the rest out there.
I have no doubt you'll crush it.
Yeah, man.
Anything else, Neil?
No,
Before we wrap here?
that's super exciting. We're going to stay in touch. Definitely want to come back and chat more about this as you guys continue
I can
to
show you
grow.
guys a demo off the record.
Okay.
Love
You guys
it.
want to see
Love it. Let's do it.
Into it.
So as we wrap up here, this is not going to be a surprise question for Joe, because I actually stole with
He
pride
invented the question.
this question from Joe when we did in the early days of Automator. We did I did a podcast with you guys,
Private
and
lender podcast.
and I loved this question, and we've we're an iteration, I guess, of that podcast, I guess, in some ways.
Which I love that you guys did it, by the way.
Yeah, absolutely. So, you know the question. So what is, and there's the pressure's on here because Neil and I have already decided we're going for pizza after this podcast. So where is your preferred pizza spot in the city of Toronto?
So funny. I used to love Maker's Pizza at
That's
Avenue.
my answer.
So
Yeah.
hold on.
Okay.
Someone told us about Brooklyn Pizza.
Mm-hmm.
Brooklyn Pizza is just south of Lawrence on Avenue.
Okay.
So if you can pick it up, you can try it. If you don't like it, you can head straight to Maker's after.
That's north of Brooklyn, right? Is that the name of the restaurant?
yeah,
Okay.
north of Brooklyn.
Yeah. Laurie had the same answer, I think, when he answered. But
So north of Brooklyn is hands down like what's the guy from Barstool? What's his name?
Dave. Portnoy.
Portnoy would give it
pizza review.
He'd eat it outside, and he would not be yelling at the owner saying that his pizza sucks. It's incredibly good pizza.
Okay.
I think you guys would be very happy.
Yeah.
So north of Brooklyn?
North of Brooklyn, yeah.
Okay.
I call it Brooklyn Pizza, north of Brooklyn. My wife and I call it Brooklyn Pizza.
Yeah. Oh, that's awesome.
What about, have you heard of Roy's? Just out of curiosity.
Roy's?
Roy's
That
Pizza?
was it. That was in Guelph, though.
No.
Right? That was in
okay.
Guelph.
Okay. Yeah, you're right. Good point. Okay.
Yeah.
No.
All right. I think we got to pick.
Yeah. But the other one I was going to mention is Buddy Ollie that I've been to before a couple times.
Where's that?
Down west end of downtown Dufferin area.
I typically don't go down there.
Every time I've been though, now it's like a lineup out the door though, and it's like a half an hour wait to get in the door. So
you should see the
it's
zoo
great pizza.
You should see
amazing pizza.
The zoo at north of Brooklyn.
Okay.
Like, if you want it pickup, you better call like 45 to an hour.
All right,
ahead.
we'll call right now. Neil, get on it.
On it.
Yeah. Awesome. All right, we good?
Yeah, we're done.
That was fantastic, Joe. Appreciate your
That's
time.
a
Amazing
story.
answers. Amazing to hear the exciting news at Automator and the exciting future you guys got ahead. Looking forward to continuing on the ride with you.
Guys, thank you for the support and thank you for having me.
Thanks, everybody.
Thanks, everyone. Hey, guys, it's Neil Andrino, your co-host and your co-founder at Keystone Capital and Director of Investor Relations. I'm also a real estate agent, real estate investor, and business owner.
And your co-host and co-founder of Keystone Capital Group, Ryan McNeil. Keystone is licensed under the Mortgage Regulations Act of Nova Scotia, license number 3000549, and through FCMB, license 88799. Keep in mind, the views of this podcast are for informational purposes only and are not financial advice.